those of us who might classify ourselves as average investors, when we get a report like we did from Goldman Sachs, that if the alleged best names in the business actually have an equities slowdown, if their trading desk isn't performing as is expected, what is the message to the rest of us who might perceive the fact that we don't play in their league?
Listen, I think that the best of the banks have really set expectations over the years to underpromise and overdeliver. And today I think you look back at the last few quarters and there was quite a bit of over delivering, not necessarily overpromising, but today I think they're setting a stage of under promising. And I like Goldman Sachs. I nibbled on that here, to add to that position today. I'm looking forward to Morgan Stanley tomorrow. I think really too, this obviously the reports today, but the flattening of the yield curve and that 2 in that against that 10 is really at a very critical technical level as well. So I think that also hurt the financial space.
Jason, you mentioned taking a longer term view to some of your investments. Where are you and where is Albion Financial seeing opportunities beginning to appear given the volatility that we've had so far in 2022?
Yeah, great question. So we're seeing opportunities across our entire portfolio, which of course means our entire portfolio is, selling off with the broader market. So, whether it's a company like Starbucks, and it was actually highlighted prior to this segment as a quote unquote Chinese stock, we think that's a company that continues to execute well within a coffee market that is fairly secular growth in our view. And there's a lot of share to be taken and new products to innovate on as far as the menu is concerned. And yet the stock's down 16.5% year to date after underperforming in 2021, mind you. So I think there are areas you can go to find high quality companies. We think the mega cap technology sector still looks attractive here. I know I've been on this network many times over the last several years, pounding the table on the likes of Amazon and Apple and Microsoft, Google, Accenture, et cetera. We also like Oracle within that group as a relative value play in cloud. So I think if you're taking a long-term view, if you're thinking and acting over the long term, you can find great companies that are selling at discounts, whether it's 15 to 20% off of their highs, that you can really lean into here, understanding that they may go lower before they reverse trend. So just look for high quality, great companies with secular growth tailwinds, and I think you'll be all right.
Bill, part of what Jason just said, wouldn't financials benefit from, I'm looking at the 10-year, the yield 1.86. Aren't they? I get how important the spread is between short-term duration and the 10-year. But aren't the financials going to stand to gain as we're in this increasing interest rate environment?
I absolutely agree with that. And that's one of the reasons why, I nibbled on Goldman Sachs today, a little bit JP Morgan and Morgan Stanley on Friday. I think that they're going to be performing pretty well. But here's the reality is it's a very consensus play right now. Everybody's fairly bullish on the banks, and they've had a heck of a run. It really, it wasn't time to be adding to banks, through the last 2 months. It was the time to be adding for the banks for the last, 6 months prior to that, to 18 months prior. When the 10-year was at 60 basis points, that's when we really, started building into big positions in the banks. So, I think you're seeing a little bit of selling as some of the exuberance around it has kind of cooled off a bit. But I think that brings opportunity, and I do expect them to outperform this year.